Good morning and welcome to the trade setup right here on BloombergQuint Live. I'm Untitled Shah, and well, if people were happy until Sunday afternoon with the futures positions, I think that has changed a little bit. So let's kind of take stock of everything, right? So first, the geopolitical developments, and all of these run the risk of being stale in an hour's time. So keep that in mind. But EU, UK, and US have sanctioned Russian central bank will remove selected Russian banks from interbank messaging system SWIFT. All of these are a work in progress, by the way. So apparently the sanctions are not yet completely in place, but somewhere around there. Vladimir Putin ordered the Russian nuclear deterrence forces on high alert, which is a big negative. But Ukraine and Russian delegations are likely to meet, hopefully for peace talks, and maybe that brings about some positives. So let's wait and watch for that. The dollar is surged versus almost everything on the Ukraine conflict risk. So not only will we see the ruble correct in today's session, but we'll also see the INR in all probability coming off in today's trade. So do watch out for that as well, but don't be alarmed, because I think the global risk off and the dollar strength therefore would be working on almost everything. So keep that at the back of your mind. Elon Musk has said that SpaceX internet service is available in Ukraine, sending more terminals, and Dow futures have opened sharply lower amidst uncertainty over the global economic fallout. So much as the screen looked a sharp tick of green from the US market's perspective on Friday, I think this morning it's anything but that. Keep in mind, everybody's now starting to worry about the possibilities of stagflation as well. If there were murmurs in 2021, there is enough reason to believe that there won't be growth, but commodity costs and other costs, and therefore inflation will spiral higher. And therefore, there's a big fear of stagflation if this conflict is going to be a prolonged one. And I think that is what the US futures are indicating as well. The fact that Russia gave the nuclear deterrence forces on high alert would make the ordinary person believe that maybe this conflict is going to be stronger and longer. And that's a bit of a worry. So Asia and the SGX Nifty would be indicating the same kind of moves. I wouldn't be surprised if there's sharp gashes of red almost across. Actually, it's a bit of a mixed bag. The SGX Nifty, by the way, was up quite strongly. And since then, I mean, at least on close over the weekend, but this morning is pulling back in line with the Dow futures as well. So it is, as you can see, sharply up and then come off. So a bit of a no-go situation. By the way, we'll also have, from an Indian watcher's perspective, the GDP data. And the GDP, Bloomberg is saying, there's a story in Bloomberg which says that the GDP probably expanded 9.1% in the year to March 31st, according to a median estimate in a Bloomberg survey. This is ahead of the official data, of course. And the expectations were about 9.2. So it's a big miss? No, I mean, a slightly slower than what was anticipated. Now, what's the trade setup, therefore, for today's session? I think there are mixed views on how strong or how weak as well can the extension of the bounce back be this week. So people expected a strong extension. That was the view until Sunday. Now, at least until yesterday afternoon. Now there's a bit of a pullback that has happened. Can this extend further? Yes. But if there is some positive news around some ceasefire around Russia and Ukraine, then purely from an economic perspective, people will believe the resumption of commodities would be normal, and therefore the worst fears are unfounded, and therefore the markets could go up as well. At the same time, if the stalemate continues and the aggression continues and the loss of life and then the war continues, then obviously the markets are not going to like it. So mixed views, really. I don't know how anybody can tell you what will happen. So I'm certainly staying away. I think the only advice that can be given is that the idea should be to trade very, very selectively. And if there is extreme volatility on the downside, and if there are companies that you've always liked, then you might want to take a shot at some of those if indeed the stocks come at better valuations. Speaking of levels and valuations, by the way, CK Narayan's column this week says that there are many questions now in the minds of people. Foremost is the decline over, especially post Friday's performance. I think he says that to answer that, one has to state that the prices fell into a cluster support zone near the 16,240 mark, and this has also happened on a cycle turn date. Hence, we can take the low as being a reasonably good one. He, of course, believes that if indeed this prolonged conflict continues, then the markets have the potential to go all the way to 15,800. But for now, the 16,250 mark seems to be a key support level. To my mind, viewers, if you're watching out for sectors, I think the sectors to watch or the themes to watch from a trading perspective has to be oil and gas, because Brent is now comfortably above $100 per barrel mark. Commodities in general, because the Russian sanctions will impact prices in the short term. And I think we'll, after this point, we'll also show you what happened to aluminum, by the way. And defense, simply because it's now a no-brainer that additional defense spending is likely to be the norm for most countries. We've seen Germany announce that. I'm sure other countries will speak about that. And not just in EU, it will become a norm across the world, because I think everybody will realize that you need that self-sufficiency in defense, and therefore defense spending is going to go up. Boy, if you're an investor in companies in the US or Israel, for that matter, Turkey, which have got a fair degree of defense exports, I'll leave Russia out here, then those spaces might be pretty interesting pockets to watch out for, purely from a trading perspective. Keep that in mind. Now, while I was saying commodities, they are expected to have very wild gyrations. Look at the aluminum has extended a blistering rally because supply risks have escalated. As simple as that. I think also watch out for metals today, because steel, like I said, commodity steel, yet to verify this, but from whatever little I hunted online, apparently, Rio Tinto, BHP Billiton, Nippon Steel, Tokyo Steel, POSCO, all of these have had a fairly good run. So I think markets would believe that commodity companies in general would probably have a fair run. So the Oil Indias, ONGCs, Tata Steels, Sales, actually those might be the counters. Let's wait and watch. The stocks to watch in the session today. Biocon Biologics has made a large acquisition via its biosimilars business in a $3.3 billion deal. They could acquire the global commercial infrastructure in developed and emerging markets, will acquire the global biosimilars business with an estimated revenue of $875 million and EBITDA of $200 million. The cash payment of $2 billion will be funded by an $800 million raised through equity infusion in Biocon Biologics, and the remainder of the 1.2 will be funded by debt, additional equity, or a combination thereof. And apparently, they have commitments from existing equity holders for the same. So keep that at the back of your mind. What else? So this is, of course, the big one. Remember, Biocon Biologics. That's a big one from a fundamental perspective. KIRAN MAZUMDAR-SHAW is saying that this acquisition is transformational for them and will create a unique, fully integrated, world-leading biosimilars enterprise, which, by the way, is true. Even if the promoter is saying it's notwithstanding, this is good because this is a large one, and it does create a fairly large, very well integrated biosimilars enterprise. So maybe Biocon gets the benefits of this, but it's a large one. So let's wait and watch how the market looks at it. I'll wait for notes. I haven't gotten any, unfortunately. I'll wait for notes and some data before giving a verdict on the same. What else? I mentioned about watching out for crude-related companies. So CLSE came with a note on crude above $100 per barrel. They are saying that the futures suggest, according to them, that the Brent price will stay higher than $80 per barrel till end 23. Now, if this were to happen, by the way, viewers, it's very bad for India as a market. Be that as it may, they're saying that after the sharp global gas price spike, our tracker shows near quadrupling in domestic gas price in 7 months to $12 per MMBTU. Remember, there will be a revision April 1st week, then there will be a revision again October. So I think they are saying by October, we'll reach $12 per MMBTU, which is very high compared to the current prices. And they believe that ONGC and Oil India therefore remain the top buys. Their sensitivity analysis suggests more than 100% upside, even with much lower than futures-based crude or gas price assumptions. That's the key point, viewers. So remember last Friday or Thursday, I was making this point about how well behaved Oil India was, even in a falling market. I think energy stocks should be front and center of everybody's attention from a trade perspective, if you have to, by the way. Bharti Airtel, Indus Towers, and Vodafone Idea, all three are in focus. Aside of the telecom data, which I won't get into, But the specific announcement, the Bharti has entered into an agreement with Vodafone to buy 4.7% equity interest in the stars. The condition is that the amount paid shall be inducted by Vodafone as fresh equity into Vodafone Idea and simultaneously remitted to Indus Stars to clean Vodafone's outstanding dues. Now, it's an interesting arrangement, and I thought Jeffrey's take on this was very interesting from a Bharti Airtel perspective. They say that Bharti's decision to acquire a 4.7% stake in Indus can be justified financially. However, it raises questions over its capital allocation, especially when 5G investments are imminent. In the past 15 months, it has invested nearly 8,600 crores for raising stake in Indus and DTH businesses and could raise stake in Indus Stars further. This is likely to derate Bharti's multiples, according to Jeffries, and therefore they lower the price target to 860 to factor this. They still maintain the buy on strong growth outlook, but they lower the target price on lowering Bharti's multiples. Some of the others, like a CLSA, for example, have maintained the target prices, by the way, because they're just bullish on the way the growth prospects are stemming up. But certainly a bit of a question mark on Airtel's capital allocation policy, something that I'm sure investors or analysts will ask them when the calls do happen, if they do. A Vodafone Idea separately is going to consider raising funds by different modes or a combination of modes on March 3rd. So that's the other thing you watch out for. I thought the Motilal Oswal note on the chemical sector was interesting because they bring out certain points about commodity chemical companies. So they say that the dependence of alkylamines, Atul, Deepak Nitrite, NoSil, and Venti Organics is significantly higher on crude derivatives, benzene, acetic acid, etc. And gross margins, which contracted 37 to 51% in third quarter, and the higher operating costs also led to an EBITDA margin contraction of 6 to 17%. I think 17% in the case of alkylamines during Q1 to Q3. They say that although the companies were confident of passing on the cost to the customers in Q4, the current spurt in oil prices may play spoilsport for a longer period of time. And therefore, viewers, if you've seen an alkylamines or a Deepak Nitrite at much higher levels and believe that these are great levels to buy because the stocks have corrected 30, 40%, just keep in mind that the pricing power is not there with those companies. They're very good companies, yes, but the pricing power is not with them, and therefore you got to take stock of the situation correctly and assess it properly before jumping in to buy these stocks on the first sign of an uptick. So keep that at the back of your mind. But very interesting note. It'll be there in our research report section also, by the way. But yeah, very interesting note and something that everybody should keep in mind when people are investing in the chemical sector. Some of these companies are great, by the way. They could have really good runs going ahead as well, but be mindful of the differentiation between specialty versus commodity. So keep that in mind. Yeah, I think this is probably about alkylamines. Yeah, and look at the kind of price destruction that has happened there. Some strong price action was seen in a couple of stocks like Fine Organics and Orient Bell. And Fine Organics, an example of a specialty chemical stock with pricing power, by the way, hit all-time highs in Friday's session. Very thin volumes, though. Orient Bell is the other one which did well. Watch out for a couple of these names. But largely, I would say that just watch out for those sectors like oil and gas, commodities today, and defense. I think these are the pockets that everybody should be watching out for. But trade safe if you have to. Don't be a compulsive trader. It's okay if you don't trade for a week or two until this uncertainty passes away. Lastly, if you are stepping out, please stay masked up. And more importantly, let all of us pray for the lives and the well-being of people who are right at the center of this horrific conflict happening in Ukraine. Thanks so much for tuning in today.